Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the confusing world of business and finance, and sometimes it feels like they are just using these documents to extend the filing deadline. Today we are diving into Nabors Energy Transition Corp.'s latest report, and let me tell you, it's a bit of a unique one. It's not a typical earnings report, but more of a status update, especially regarding their business combination plans and some important logistical moves. Think of it as a progress report with a financial kicker. Before we dive deep, if you love getting the juicy details from these filings without the corporate jargon, hit that subscribe button. We break down complex financial stories every week. Also join our Discord community, linked in the description below, where we discuss these reports and much more. So this report is dated August 15, 2025, and it's all about what you call Form 8K. This form is used for significant events that the public needs to know about right away. So what happened on this particular August day? First off, we see Nabors Energy Transition Corp. The company filing this. They're involved in what's called a business combination, which is basically a fancy term for merging with or acquiring another company. In this case, they're looking to combine with E2 Companies LLC. Now let's look at their publicly traded stuff. They have these things called units, and each unit is made up of one Class A ordinary share. Think of an ordinary share as a basic ownership stake in the company. But here's the kicker. These units also come with half of one warrant. A warrant is like a coupon that gives you the right to buy a company's stock at a specific price in the future. So with these units, you get a piece of the company and a potential future buying opportunity. Then you have the Class A ordinary shares on their own, which is just that basic ownership again. And then there are the warrants separately. These give holders the right to buy a Class A ordinary share for $11.50. This price is important because it sets a floor for how much the stock needs to be worth for those warrants to be valuable. If the stock price goes way above $11.50, those warrants become quite attractive. An interesting tidbit here is that they identify as an emerging growth company. This means they are a relatively new company and get to follow slightly different rules, potentially delaying some reporting requirements. Think of it as a bit of a grace period as they grow. Now we get to the core of the announcement. This section talks about a material definitive agreement, which is just a legal way of saying a really important contract has been made. On August 15th, the company issued a promissory note. A promissory note is essentially an IOU. This one is for $250,000 and it's unsecured, meaning there's no specific company asset backing it up, making it a bit riskier. It's issued to an entity called Nabors Lux, which is related to their sponsor, essentially the entity that helps set them up. Accession Number, the extension, what's the extension? The company's board of directors decided to push back the deadline for them to complete their main business combination deal. Originally, they had until August 18th, 2025, but they've extended it to September 18th, 2025. So that $250,000 note is tied to giving them more time to make this merger happen. Here's the deal with the note. It doesn't earn any interest. That's pretty unusual for a loan. It has to be paid back either when they successfully complete their business combination or if they fail and have to shut down, which is scheduled for around September next year unless further extended. If the merger goes through, this loan will be repaid from the money set aside for their public shareholders. Alternatively, the sponsor can choose to convert this loan into more warrants at $1 per warrant. That's a pretty sweet deal for the sponsor if they think the warrants will be worth more. But if the merger doesn't happen, they can only repay this loan using money that's not in the shareholder trust account. This basically means if things go south, the existing shareholders' money is generally protected, but the company's own funds would be used for repayment. This is a bit of legal stuff. It means they didn't have to go through the usual lengthy process of registering this loan with the government because it was a private transaction with a sophisticated party. This section just confirms that what we just talked about, the promissory note, is indeed a new financial commitment for the company. And this one points out that the way this loan was handled might be seen as a type of unregistered sale of securities, again because of how it was issued privately. This is where they announced the extension of the business combination deadline, pushing it from August 18th to September 18th, 2025. And crucially, in relation to this extension, Nabors Lux has put another $250,000 into the company's trust account. This is often done to show commitment and to give the company the financial runway it needs to finalize a deal. Then we get into what's called important information for shareholders. This is a standard disclaimer for these types of filings when a company is going through a significant transaction like a merger and is asking shareholders to vote on it. They're saying this document isn't an offer to sell or buy any shares, nor is it a direct request for votes. It's more of an informational announcement. This part details the planned merger with E2 Companies LLC, which was agreed upon back in February. They're filing a document called a registration statement to get everything ready for the transaction. This statement will include a prospectus, which is like a detailed brochure for investors about the new combined company, and a proxy statement, which is used to get shareholder approval for the deal. They are strongly encouraging everyone who holds shares in either company or anyone looking to invest to read these upcoming documents carefully. They'll contain all the critical details about this merger. It's a pretty standard but vital warning to investors. This section is about who might be influencing the shareholder vote. It lists the companies involved and their key people like directors and executives. They're essentially saying that these individuals might be considered participants in asking shareholders to vote for or against the deal. And finally, the forward-looking statement section. This is a huge part of almost every financial filing. It's where the company basically says, hey, we're going to talk about the future here, but the future is uncertain and things might not turn out the way we expect. They use words like could, should, may, believe, anticipate and expect to signal these are predictions, not guarantees. They're warning that these future projections are subject to risks and uncertainties that are hard to predict and often out of their control. They list a bunch of potential problems like not being able to close the deal, regulatory hurdles, shareholder opposition, difficulties integrating the companies, and even the risk that competitors might do better. It's a long list designed to protect them legally if their optimistic outlook doesn't pan out. This last item is just a list of all the documents they've attached to this report. Here you see the actual documents like the promissory note itself and the press release. And finally, the signature. This is where the company's authorized representative, in this case Anthony G. Petrello, the president, CEO, and secretary, officially signs off on the report, attesting that the information is true and accurate to the best of their knowledge on August 15th, 2025. So what's the big story here? Nabors Energy Transition Corp I is navigating a crucial period. They've secured an extension for their business combination with E2 Companies LAC, showing they still believe in the deal's potential. The $250,000 promissory note from Nabors Lux is a key factor in this extension, providing the necessary financial push. It's a zero-interest loan, which is quite a concession from the sponsor, highlighting their commitment to seeing this merger through. From a financial table perspective, there isn't a traditional earnings report here, so we don't have numbers like revenue or profit to dissect. However, the key financial element is that $250,000 injection. It might seem small in the grand scheme of a merger, but it's vital for extending deadlines and showing that the sponsor or the main backers are still confident. The fact that this loan doesn't carry interest and can be converted into warrants is a significant benefit for the sponsor, suggesting they are highly motivated to see the combination succeed. The biggest risk for investors right now is whether this business combination will actually happen. The extension gives them more time, but it also means the uncertainty continues. Shareholders are essentially waiting to see are critical. If the combined company's stock can't get above that level, those warrants might expire worthless. On the flip side, a successful business combination could unlock significant opportunities for Nabors Energy Transition, a sector with massive growth potential. The forward-looking statement section, while legal boilerplate, does hint at potential benefits and strategies. However, it also clearly outlines the many hurdles they must overcome. Ultimately, this filing shows a company actively working towards a major strategic goal, using financial tools to manage the process. The sponsor's financial support through the promissory note is a positive signal, but the success hinges on completing the E2 Companies LLC merger and the market's subsequent valuation of the combined entity, particularly whether the stock breaks that 11 Shem 50 mint, but the real value will be determined by the successful execution of the merger in the coming month. So what's your take on this extended timeline and the sponsor's backing? Do you think this merger will get across the finish line successfully? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give it a thumbs up and subscribe for more detailed financial report analyses. Don't forget to join our Discord community. It's a great place to discuss these topics further. Thanks for watching, and I'll see you in the next video.